Hi, folks. Dan Bird here with the Daily Scan. Today is Thursday, December 19th, less than a week left till Christmas. And after that big sell-off yesterday, which I touched on last night, we'll take a look and see what the market has done today. You can see my headline for today has the Hindenburg Omen triggered. We'll talk about the Hindenburg Omen, and I'll explain what that is in a minute, and we'll see if it's triggered. Disclaimer, I'm not a financial advisor. I cannot give you recommendations on what to buy or sell. I would recommend that you understand your own trading style, your risk profile, and if you would like to engage with a financial advisor, go to this website to make sure that they are reputable. All right, so let's take a look. Hindenburg Omen. First, we'll look at what the market looked like today. And as you can see with my market bias chart, it is continuing to go lower. We broke down below this previous low. This is a 3-month view, by the way, so roughly 1 quarter. And you can see we're at the lows ever since back in September. And this is continuing to go down. We'll look at the charts real quick, the S&P. So a lot of times when we get that kind of sell-off like we had yesterday, and I mentioned this to a subscriber on the channel, they said last night it looked like some of the stocks were recovering, and I said yes, it's not unusual to get a reaction rally in the morning, and we did get a little bit of that in the morning. But I said the end of the day, the close is more important, and we closed at near the bottom, near the lows of the day, actually a little lower than the previous day. So the market could not hold up. It's now solidly below the 50-day. It's right above the cloud, which is a long-term support level. So we'll see if it holds that or continues through. Everything looks right now that it may continue down at least for a little bit more. And remember, I'll look at the Max Payne charts that we looked at earlier in the week. And if you are interested in Max Payne, go back and look at that video from, I think it was Monday this week when I talked about Max Payne. We'll look at the NASDAQ real quick. Got a lot to cover tonight. So sitting right on the support line, this is a Fibonacci support level right here. So sitting right, it's basically the support from this previous high. It's where it is, below the 21-day, but still well above the 50. So the charts are not broken yet. They have definitely come down, and that might be painful. But in general, the uptrend is still intact. So always keep that in mind. We'll look at the Dow, which has been awful. Somebody said, a lot of the headlines are the Dow is the more down days since 1974. But I listened to Stock Traders Almanac today, and they said that typically 70% of the time, the Dow will recover and move up significantly when it's down that much. Didn't happen today, though. It tried in the morning, but came back and ended right at the lows of the day again, and this time in the cloud. So below the 50, below the 21, 200 is down here. So it's got a ways to go to get there. It's at 40,750 roughly. 40,000 level is right here on this Fibonacci level. So that would be an extreme sell-off if we got that low. If we got that low, I think we're definitely due for a bounce at that point. But we'll see if that happens. I think probably the rest of the year is still going to be bullish, I think. I'm beginning to doubt whether we'll get back to the all-time highs. But I do think that after tomorrow, options expiration, and the first couple of days of next week, the rest of the year after that historically has been very bullish. So if that does not happen, then we're in big trouble, and that might probably will carry over into Q1 next year. All right, let's look at Bitcoin, of course, just to see what it's doing. Came down again as well, although recovered. It did not end at the lows today. So below the 21, but still above the 50. So it's actually hanging in there pretty well. It's really just going sideways, came down to this basic support level right in through here, and then bounced off of it and started moving back up. So it looks like maybe Michael Saylor saw an opportunity to buy some more Bitcoin for MicroStrategy. Who knows? But that's what Bitcoin looks like. Everything, it looks pretty negative today. So let's talk about the Hindenburg Omen and what that is. And before I talk about that, I first want to go show you some breadth charts, in particular, the McClellan oscillator. So on the website, this is the website, breakpointtrading.net, where you can find the YouTube channel as well as the weekly newsletter right there in that little box. If we go down on the left-hand side, down near the bottom, McClellan oscillators right here, we'll look at the New York Stock Exchange. This basically is a moving average of the advanced decline lines. So if it's below zero, that means there are more decliners than there are advancers. And sometimes you can use this, especially if it is a negative divergence. So what you can see, and I'll draw these lines in here for you. If we draw a line, basically the index did not go up from this point here around beginning of December. Let me change that color. So right through here, beginning of December on, just kind of went sideways right there. At the same time, if we take this up to right above where this started to basically roll over a little bit, that's right where the advanced decline line went below zero. So we have a downtrend. We've got more decliners than we have advancers, while the market was just being static, just going sideways, not declining, but there were more decliners than there were advancers. And then finally, everything broke down. And if I extend this channel line, if I extend this channel line up here, basically like that, you can see we've broken the trend now. So we're below the channel line. Not a lot, but we are below it. Bullish percent index is now below 50. We'll look at this again in a minute, so keep that in mind. So I talked about this earlier this week as well, that once it gets up above 70, that's an overbought area. It means a lot of people are bullish. That's usually where the market typically will reverse, and that's pretty much what's happened. You can see the bullish percent actually started coming down even before that big sell-off. So it was giving us advance warning, and I'll show you that again in a minute. The reason I show you the McClellan oscillator is because it is a component of the Hindenburg Omen. So if we go back to the website, and just below in the left-hand column, just below where I have all the breadth charts right here. So here's the McClellan oscillators up here. At the very bottom, we have the Hindenburg Omen. And I'm going to look at the 18-month Omen. And first, let me explain what it is. The Hindenburg Omen sounds pretty ominous. Made up of three components, three indicators. Number one is the NASDAQ 100 needs to be below its 50-day moving average. Well, it's not below it yet, but it's pretty darn close right there. So that one actually has not triggered. Number two is the new highs and new lows greater than 2.5%. So we have to have both of those being true. Now, many times when there are new highs, there are fewer new lows. Or when there are new lows, there are fewer new highs. When both of these are high together, when they're both above 2.5, which is where this horizontal line is, when they were both above it at the same time, which you can see happened right here, about a week, actually earlier this week, that happened at the same time. So that condition has triggered for the Hindenburg Omen. The third one is the McClellan oscillator, which I just showed you. And it's showing the NASDAQ McClellan oscillator, which is very similar to the New York Stock Exchange, although a little bit different. So if we look at the NASDAQ, you'll see the same thing. A lot more decliners when it's below this 30 area. You know, it can bounce between the 30 area when the market's going sideways, but when it goes below 30, that is definitely negative. So it's definitely gone below 30, and you can see the bullish percent index for the NASDAQ 100 is also significantly lower. So that one has also triggered. So two of the three for the Hindenburg Omen have triggered. Now, the indicator up here basically looks at each of these three. So the bottom blue area is one of them, and the next one, and then the third one. And you can see it's pretty solid up here, which means all three of them are very close to triggering, although the 50-day has not yet triggered. But that could happen at any time. So the Hindenburg Omen is very close, if not already triggering, indicating that the market is getting ready to go into a significant downtrend. Now, one thing I noticed about this indicator is that when none of the three are true, you get these big gaps right here. And when the gaps happen, it's usually when the market is beginning to recover, to come back up again. So you see a gap right there, the market has started to recover down here. You see a gap right there, the market has started to recover. So we'll keep an eye on that if it continues to go down. But right now, the Hindenburg Omen is probably a day or two away from actually triggering, but it actually looks pretty ominous. There's also another one called the Titanic syndrome, and that's made up of the NASDAQ making new highs, which it has, and then a sudden jump in new lows versus new highs. So down here, you see new lows right here. There's a sudden jump in new lows versus new highs. So that's the red lines up here. That's the Titanic. That happens a lot more often than the Hindenburg. But this chart can be found on the website, on the charts page, the lower left-hand corner, all the way down here. I also have a longer term 6-year, and you can see it's also looking pretty solid up here. So it's also getting ready to trigger. Very close to it right now. All right, that's the Hindenburg Omen. Let's look at some of the other breadth indicators. And I wanted to show the bullish percent index. Again, I talked about this earlier in the week, and actually when I talked about it, we were right here. So down 25% on the S&P. And at that point, and I said this at the time, if you go back and look at it, just a couple of days ago, I said at that point, the NASDAQ 100 was flat. It was right there. And I said, the S&P seems to be leading to the downside. There's fewer and fewer bullish traders out there, while the NASDAQ 100 has been flat. I said, if the NASDAQ 100 starts to catch up with the S&P, then we need to watch out. And now you can see what's happened already. It's actually lower than the S&P is up here. So it had been flat when the S&P was down 25%, and it's now down significantly. So that is not a good sign. We also broke through this bearish wedge. This is a pattern. I probably will talk about patterns at some point, but we broke the bearish wedge. I said wedges like this typically break to the downside, and this looks like it's just started. So we'll see how much more this has to go. And I'll show you a way to identify that in a minute. Intermarket relationships. So these still actually look pretty good. So NASDAQ versus the S&P is still trending higher. Growth versus value is actually ticked up a little bit today. Consumer discretionary versus staples ticked up a little bit, but mid cap and small cap are significantly lower. So they are continuing to trend lower, which doesn't help the Russell 2000 or the TNA. What else do we have here? Here's the National Association of Investors. And you can see right here, it went above the extreme bullishness line. And usually when that happens, you can see right here, right? When that happened here, it was very close to rolling over. When it happened here, just before it rolled over, happened right here, just before it rolled over, went down, and it happened right here a couple of days ago, which would have been this blue bar right there, and now we're rolling over. So all of this implies that we may have more downside still left to go. That doesn't mean we have to, and we've got options expiration tomorrow, and then we've got the first couple of days next week that Max Payne usually rolls into, and then we start what historically is the best time of the year. So if that does not happen in the later part of next week, then we could be in big trouble. What else do we have here? 50-day, 50 and 200 analysis is always interesting. Actually, sometimes it's kind of boring, but right now it's pretty interesting. So here we have the percentage of stocks that are above the 20-day moving average. Way down here. Usually when it gets at a low like this, you can see these vertical green lines. That's usually when the market has bottomed. So right there, didn't quite get to 20, but was headed there. Market was about to bottom. When it gets up here to close to 80 is when the market sometimes rolls over. So we got close to 80 back here in the beginning of December, and the market continued to go higher, but the number of stocks above their 20-day continued to go lower. The number above their 50-day went lower too. And the number above the 200-day, which moves much more slowly, continued to go lower. So all of these, this one, actually, the line in the sand is here at the 50% level. If you look at this, this is the NASDAQ 100. So it shows you that percentage of NASDAQ 100 stocks above their 50-day right now is at 33%, or in other words, only 33 of the 100 are above their 50-day moving average. That is pretty negative. You can see the put call ratio too, interestingly, actually ticked down today. So even though the market is selling off significantly, the number of puts didn't go up. So usually when the put call ratio is this low, that means everyone is still bullish. And we'll see what happens tomorrow. I think the data on this comes in on Thursday. So this might start to tick higher tomorrow. But that's pretty interesting that it didn't tick up. That tells me that there's still a lot of bulls out there, and we might probably still need to wash out more of that out of this market before we're ready to really start to rally further north. All right, there's one other chart on here that's really interesting. I usually don't look at it because we haven't been going down, but since we just started going down, I have up here what I call my best bottom finder. So best bottom finder for the NASDAQ 100 incorporates a lot of the things that I just showed. So here's the medium-term trend, the MACD. Here's the MACD shorter term. It's already crossed over. Still above zero though, so that's good. Here's the RSI, relative strength, which I talked about on Tuesday. It was flat. Now it's down below 50, so it's below the 50% point. Remember, I said 40 was kind of the line in the sand. And then when it gets down here below 40, then 60 becomes the line in the sand for a recovery. So we'll see if that continues to head lower, gets below 40. We're still above the 50-day moving average, though, which is positive. Here's that net percentage of stocks below the 50. So again, we're not down to the green line. We're not down to significantly oversold yet. You see it happened back here in April. We had the big sell-off back in April and May. Then we had another one here from July to August. And this one didn't quite get to it, but it got close. This is actually a little bit higher than this one is right now. So this would still need to come down before we can identify a bottom. This is the stocks above the 200-day. You can see right there when it went below the 50% level. This is where we hit a bottom. And we're not there yet. So we still have more to go. And then we have the VIX down here. So the VIX today was at 24. I talked about this a couple of days ago. It hit a significant high right there and continuing to move up. Bullish percent index, which I already talked about, is now below 50. But again, it is not down to the oversold level yet. So that still has a ways to go. And then the advanced decline line, which I talked about before. These are the number of decliners. This is basically the McClellan oscillator, different view of it, but that's significantly lower too, and it has not started to turn up. So if we continue going down, this is the one that we will look at. We'll take a look and see what the status of this is. This is one that can help identify where the bottoms are. So you can see that bottom there back in August when we had this 2 month, actually month and a half downtrend. So this bottomed, the MACD turned up, the RSI started to turn up, the percent below 50 hit a bottom and started to go higher, percent below 200 started to go higher, and the VIX hit a significant high, hit a peak right back here, up around 40. So those are the things that we need to see. And then the bullish percent index also hit down here at 30. So those are the things that we need to see before I would be confident saying that the bottom is in and was starting to go higher. I don't see that yet. I think we may still have some more to go. We'll see if the 50-day ends up being support. We only have, if the historical trends are true, then we've really only got about 3 days left. And this could easily go down to the 50 in 3 days or just go sideways around there. So we'll see what happens. Okay, a couple of stocks. Oh, one thing I do want to look at as far as stocks are concerned are the Max Payne stocks that I looked at earlier in the week, and we'll see what they're doing now. And I said then that I don't expect them to hit the Max Payne level, but it does give an indication of direction. So Max Payne we did on Monday. So this Thursday, Wednesday, Tuesday, Monday, we did it right there. It was an up day. I'm sorry, it was Monday. It was an up day on Monday. So that's where we did the Max Payne presentation. This is last month's options expiration. Tomorrow is this month's options expiration. And you can see, so keep in mind that this right here is where we did the report, Max Payne, which is actually offered by Tom Bowley and on his website, Earnings Beats, which if anybody's interested in that, he's got a lot of good content there. But you can see right there is the short-term down signal was given, but the Max Payne level was way down here. So will we get there? I probably don't think we'll get that far. We could make it down to the support level though, right there at 570. And we potentially could even make it down to the previous Max Payne. Last month's Max Payne, which was 560, that's only 26 points away. So that is absolutely possible. We went from basically 605 down to 585. So we went down about 20 points right here. This is the SPY, by the way. So we could easily go down another 20 points from here, get down here to 565, somewhere in this area. We'll see. So there's the SPY. Here's the Qs. NASDAQ, Max Payne was down here, just about almost at the 200-day moving average. It's now below the 5 and the 21, maybe headed toward 506, which is the 50-day. Here's NVIDIA. Max Payne was down here at 107. So NVIDIA actually didn't go down as much yesterday. It started from a higher level, but it really didn't sell off as much. So it actually hung in there pretty well, interestingly. Better than most of the other stocks. And today it didn't go down, didn't breach its low from yesterday like many other ones did. So NVIDIA actually is hanging in there. Here's Amazon, same thing. Amazon still looks very bullish. You see it hasn't even come down here to this support level down here at 215. So its chart is not broken. Broadcom, also not broken. It looks like it's coming down to gap support right here at 215. It's only 3 points away, so that could easily hit there tomorrow. But it could actually end up somewhere in this gap. The 21 day is right there at 194. So somewhere around 200 might be support for Broadcom. By the way, sell-offs like this, if you have been following my daily scan and put stops in, you hopefully will be stopped out of most everything with a very small loss. I think my total portfolio loss right now is less than 2%, and I'm pretty much in cash at this point. But that's the place to be when we have sell-offs like this. If the market continues to sell off, you want to have lots of cash available to get back in when it starts to rally higher. Now, Apple actually did rally today. Apple went back up very strong. Microsoft continued lower, right on the 21 day, and the Max Payne is down here. Like I said, I never expected to actually get to Max Payne, but it does help me understand what the direction probably will be for the week, and it's certainly holding true this week. So there's Meta. Here's Netflix hanging in there. Actually, Netflix is looking pretty strong. Google, not too bad. Actually closed at the lows today, so we'll see if that stays there. This one actually is still on our daily scan. Tesla also hanging in there strongly. 21 days down here at 393. Sorry, 395. Let's call it. So that's about 40 points more, and that's it. All right, so that's it for today. Two more I'll look at because one was had earnings today and is in the semiconductor space and did not do well. Micron. Micron missed earnings. It's now right down here at a, a major support level right down here. So you can see it actually went a little bit below it, probably right there where all those other tails happen. So it went right down to support and bounced back a little bit. This is probably where it will go sideways and might start to move back up. You might start to get some buyers coming in now at this point. But if it doesn't, if it breaches that 85 level, then all bets are off. Micron will probably continue to go lower. So it's at a very important inflection point right now. And then two more. Let's look at TNX. The 10-year now has broken resistance, so it's in new territory up here. Probably will be heading, let's go back a little bit. Let's go back a year. Let's see where that was. Yeah, still got a ways to go to get to all-time highs up here at 5, but it looks like it's headed to 4.7, and it's not too far away from it. It's at 4.57 right now. So the 10-year continues to move higher, which likely means TLT is moving lower. Yep, TLT looks like the reverse pattern from that one. And then we'll look at small caps because we had been tracking that using the the 3X leveraged ETF, and it continues to head lower. So this right here is what's called the falling knife. Somebody said, what happened to BTFD? Buy the frickin' dip. Well, there's a big difference between BTFD and a falling knife, and that is a falling knife. So if small caps are going to hold true to their historical trend, which usually starts at the end of next week all the way till April, is the best time of the year for these. It needs to turn around really quickly. And right now it's sitting on the 200-day moving average and doesn't have any signs to me that it's going to turn around. So that's not a good sign. All right, so that's it for today. Thanks everyone for watching. Please like and subscribe so we can keep this going. And give me any questions, comments, or any other stocks that you might want me to take a look at. Be happy to do that. And that's where we are for today. So thanks for watching, and I will talk to you again tomorrow. Take care.